So let's take a look at yesterday's market. We had a big move in the market. So yesterday's video, play yesterday's video, how to trade these balance areas. So market structure, I went over market structure yesterday, and I called out a level to look for yesterday at this point. It was a low volume node, and also it was got outside of profile, got back inside of it. We went over this yesterday before it happened in the video. It ran from 32 all the way up to 66. So, and then we had a big breakdown of low value area yesterday. Market just crashed. And then we got back inside of our trend. Our trend turned green. The first retest, it caught the big move up. Broke back inside, retested, caught the big move up. And then it caught another one. It caught the break inside of low value, retested. This is actually a big confluence trade, and it ran from 06 to 22. This is a real big trade right here because it lines up. So let's just go over this real quick so we understand how this works. So on our 4-hour profile that we use, we have a 2 to 4 hour profile that we use, and then I have the intraday profile in the charts now for you. So you can understand how balanced and imbalanced markets work. So when you're balanced, you're in between market profiles. So here's high value, control points, yellow, low value. So we were in between. This is a balanced market. So if you get outside a profile, the market becomes imbalanced and it tries to find fair value at the next control point. So that's what it tries to do on the previous control point. Or if you get outside of value here, it tries to find value at the previous control point. If you noticed yesterday, which I'll show you, I put the targets up at 8:30 yesterday, and they hit my first target once it got outside of the low value area. It went right to the previous day's control point. It went right to it like a magnet. So that's what the market likes to do. Either it's going to stay balanced inside a profile, and the market can just oscillate back and forth, buy the low, sell the high. This is called a balanced market. Or it gets outside a profile, HVA or LVA, and then we have an imbalanced market, and the market tries to find a new fair value area. So we'll go to the previous days. We'll try to go to the previous day's control point. So that's the target to hit yesterday. So what happens if you're outside of profile, though? The same thing. If you're outside of profile already, which we were outside of profile, and it hit my targets right here. They took it to the woodshed, hit the targets, and then they came back up, and it was outside of value. Then it got back inside of low value. So right when it gets back inside low value, immediately you're thinking retest long. You're back inside of value. They just cut all the shorts. They retest the value level, and consequently that retested our trend zone, which is green, and retested our buy 25 zone. This is triple confluence. This is the best trade you're going to get with market profile and our software together. This is confluence. That's confluence, market profile confluence. And the market proceeded to go from 06 using a 35 tick reversal to 21.5. So right around 15 S&P points. And it wasn't very long. It was a matter of an hour of trading or so. Went up 15 S&P points. Okay, so because it got back inside of value. So when you're trading these value levels, let's show you how traders get trapped. So traders get trapped in a couple ways. And play yesterday's video, went over in great detail on how to do it. But here's value. So one way they get trapped is you're outside a profile. You get back inside, retest, and all the shorts got trapped, right? It ran 15 S&P points. The other way, the longs get trapped if you break outside of profile and get outside of value. Then the longs will get trapped. You look for the retest and you look for the continuation, and then the market will try to find fair value at the next control point. Vice versa. If you break outside of HVA, the shorts will get trapped. They'll retest it, and then they'll try to find fair value to the upside to the next previous day's control point. Like that. But it can happen the opposite way too. If you're outside of value already, it can come back inside of it, retest it like it did. This is Confluence, and it ran 15 S&P points. The other way, and this is a trade I talked about yesterday in the video before it happened. Let's say you're in an uptrend and you're inside of value. The market can dip below, and this is how they trap traders. The market can come down, dip below low value, come right back inside of value, retest it, and this is this 32 long that just shot up like crazy yesterday. Just like that, because this is a liquidity grab. They can grab liquidity, one of the best trades you can get if you get outside of HVA or LVA and come right back inside of it. You're looking to go long here, and that's what happened yesterday. We had a big move in the morning that I talked about where it broke back inside of it or outside of it right here. This is the one I talked about. That candle, it broke outside. HVA was sitting right at this level. Or low value area, sorry. The trend was up, so it's hard to see the profile over top of it because it kept trading through it. But let's just show you how this works. So this is a trade I talked about at 8:30 in the morning. I said if we dip, since we are green trend filter, my 30-year back-tested trend filter was green. Low value area was right here. I'll make this green. So we dip below. It caught traders short and went right back inside of it with the pull-in bar. This is a liquidity grab with trend. They just grabbed liquidity, and that went from 32 all the way to 66. And I talked about this trade an hour and 20 minutes before it came up. And it was right on my low volume node too that I projected. So I'm going to give you the low volume node to project a trade this morning right now. So how do we do a low volume node? So right now, if I look at the market, I want to look at market profile. So here's the bell curve. Here's a high, here's a low since midnight. So I want to find the lowest volume period in the market that's profiling since midnight. So when you look at the bell curve, you find the lowest volume that's occurred. You can see where they're at right away. There's one. So you look to the left. You see these little mark inside with a volume. There's one. Low volume node. And here's two. Low volume node. Here's three. Low volume node. So these levels are great levels to trade off of. So you can see we came up to the first low volume node and hit resistance. This will be support below here also. So you can find out as you're trading during the day where possible launching points are in the market. So right here is a big level. Let's look at the current level right now. Here's a big level we have to get through. 37.5. It's got to get through 37.5. So if we can crank through 37.5, this is a good line in the sand to get through. Once we clear that, and we clear 43, we're looking for a move up. Now, let me show you this, how they trap traders up here. This is a liquidity grab up here above HVA, but it's against trend. So this is actually a liquidity grab. Now this is a 1/135 chart. You can use a smaller chart, 1/120, 1/125, 1/130, whatever you want to use. But you can see they got trapped right there because they were outside of HVA and got right back inside. That's a trap, but it's against our trend filter. This is the same trade that happened yesterday that moved from 32 to 67, but it was with trend, right? So we want to see this trap happen with trend. In other words, I want to see this trap down here when the trend's up. I want to see it go below 28, start closing candles below it, and then close right back inside of it, and that's your liquidity grab trap, right, with trend. So that's how we grab liquidity grab traps. When you close below it and get right back inside of it, it happens on a day-to-day, week-to-week basis. They trap traders like that. So that's what we're going to look for again today. Play yesterday's video. I go into great detail how to do it. If you notice, here's value. This is intraday value. Intraday value, I like to look for the bear and bull traps. And then my large market profile, this is the most important one. This will tell us the overall big possible moves, because yesterday, before profile moved, profile was up here at this level at what, 28, and I had it targeting 83 and went right down to 83, almost hit our other target. So today, let's take a look at where we're looking for for targets. So here's a control, and here's a control. So here's a control. Those are my 3 control points right there in this level. So these are my key levels today on the S&P, because what the market likes to do after you get outside of HVA or LVA, it likes to go to the next control to find fair value in the market. So that's what we'll leave up here. So if we break out today, it's very, very simple. Our target, our fair value, if we break out at 47 3/4, our fair value is still at 80. If we break down, then our fair value is at 08 3/4 and then 83. So we'll watch those for the targets to come up to see if we can hit those targets. Right now, if you look at the intraday profile, we got to get above 42.5. I mean, we're right at key resistance. So it's going to have to clear, to get good signals, we're going to have to clear 42.5 before I get excited about taking a long. And then we can look for a pullback buy. You can see it over here on our chart, 42, 42.5. Once we clear that, it's early, it's only 8:36. Once we clear that, we should have good direction. We should break value, and it'll seek the next fair value at the next level. But until that, we're going to sit tight and see if we can get out of this range. Remember, if you're inside a profile, which we are now, the market's balanced. So when it's balanced, it likes to do one thing. It likes to come here, go there. So until it breaks out, you got to anticipate the market staying in range. And typically it breaks out of range with the opening bell at 9:30. That's when typically 9:30, 11, you break out of range, we start getting some good trades. Right now we're going to sit and wait, break out of value. I don't like taking these trades that's inside of value until we break out. Once we break out, we'll look for the first retracement. The key is to spot the major turning points. You really want to try to break when you're breaking inside or outside of value. that's when you're trapping traders. And that's what we want to do. So we'll see if we can get outside of value. Right here's a low volume node. You can see it bounce right off of it. It's 37.5 to the tick. Look how it bounced off of it right to 40 3/4. See how that's major support now? That low volume right here. So this low volume will change during the day. So what you want to do for you traders that have lifetime Ninja traders, lifetime licenses, I'm sorry, put that on there on your charts. It's a really good confluence level with our software because it lets you know where the major support and resistance is. Stopped it right to the tick right there, 37.5, the low volume node. And what happens is you will get it where it lines up. It lines up with these trades. When you get alignment on market profile and you get alignment like this. It happens on a week-to-week basis. Look at that alignment. Broke back inside a low value area, retest a low value area, right inside my trend zone, right inside my buy zone. So you will get that happen a lot during the day. So just be prepared to watch for that confluence. But you can see that's how you do a low volume node, how you find your low volume node. Just skinny it down. Find the lowest volume part of the market when it starts profiling. This is the current one right here, right now. That's a big turning point, 37. So as long as we stay above 37, this market is pushing to the upside. Our trend filter says that anyway that we're pushing to the upside, but gives you confluence. So if we look at the buy setups this morning, let's take a look at it. We had a buy setup here. It was inside my 25 buy zone and my trend zone. This is a buy setup. It just didn't turn yellow trigger because it didn't stay inside my trend zone. It only stay yellow trigger if it turns inside my trend zone. That's a buy setup. This broke inside of LVA, retested LVA. That's confluence. That's the one I just showed you. Another great buy setup this morning. And it got inside of my 25 zone. And it got inside of my trend zone. And it retested market profile. You're 3 for 3, 3 times confluence. Another buy setup this morning. Then we come up and we get right at my buy zone again. Buy zone. It's the third buy zone. And it got inside my trend zone. That's why I turned yellow trigger. Remember, this is a 135 chart. You can go lower if you want. And then I showed you how to do a low volume node. Right there, the low volume node I put up this morning. Look what the market did. It pulled in with my buy, my reversal candle, and the liquidity grab stopped exactly to the exact tick of my low volume node. Right there that I put up. That line, look how it stopped right on it, and now you're getting a follow through. So that's how you do low volume node, guys. Right there's your low volume node for the continuation showing support. And what happens is you'll see alignment that will happen up with our software at the same exact inflection point during the day. Okay? So this is where you look for potential reversals. This is a point of what's called a low volume node is a point of rejection, guys. That's what it is. It's just a simple point of rejection or reversal. All right, so there's our 3 buy signals this morning. This is my best one. I like this one because it's confluence. And it got inside the low value. So you caught the wrongly positioned traders. I love this setup right here. Got inside a low value. Retested low value. Got inside my 25 zone, my trend zone, yellow trigger, and this was nice for continuation. This one got inside of my green trend zone, 25 value, reversal, retest the low volume node to give you confirmation it's going to hold. Some traders will try to trade out the low volume node with my trend filter. That's a great idea. So if my trend filter is green, if I'm green and I come down and touch a low volume node, I ran a trade like this yesterday when I was in the room that we talked about. It came down to the low volume node, got right in the low volume node with a small stop. I had a 12 tick stop, and the market exploded right off of it. So you can trade off these low volume nodes. If you do that, if you trade these low volume nodes like this, you better be with trend or it will run right through you. So go with trend filter trend. So if you're going to trade this low and put an order in here at 37 and a quarter, put a limit in at 37 and a half, 37 and a quarter, 37 and a half. You can do a tick above. You can put a 12 tick stop below that. That volume node should bounce the market, which it did. So your fill would be around 37 and a half. You're sitting at 45 right now, just by buying off this low volume node with a small stop. But I would only do it with my trend filter. That's how you trade off low volume nodes with our software. You want to trade off this 30-year back tested trend filter. If it's green, we're buying the low volume node right there. We're buying our reversals off of our trend zones. 1, 2, 3, 4 trades right now that have worked out here this morning using the software if you're using it correctly. Okay, but that's the point of rejection. Low volume nodes are rejection or a reversal. You want to go with overall trend.